Good morning. It's the end of the year. It's actually not the end of the year. It's the start of the new year, but it's kind of the end of the year for us on the Traders Workshop. Today, we're going to talk about this late market sell-off, the Santa slump, as they're saying, as opposed to the Santa Claus rally. We're going to get into that, get some ideas from Jason and from Volin and Mark and myself on what could be happening here right after the bell. Hi.
What's up?
What happened to music?
I know we didn't have the music. That's okay. It's a Yellowstone music. Although the Yellowstone music for me is morphing into the Landman music because I finished Yellowstone and I'm on the Landman now, which I love. Crazy show, unbelievable. But anyhow, I digress. How are you guys? Happy New Year. Haven't seen you guys in a while. Everything good?
Yeah, things are great. How are you doing, Lex? How was your holiday?
It's awesome. It's all my holidays are always awesome. I would say having Christmas and New Year's on Wednesday this year killed 2 weeks for me. Right? You
right.
got through Monday, Tuesday. Before you know it, Tuesday's like Eve. Wednesday's the day. Thursday's recovery. Before you know it, you're into Friday. And you almost have a whole week off, which times 2 becomes 2 weeks. I mean, sort of.
Yeah, the kids had 2 weeks off from school. Like I
don't have that anymore. I don't have little kids anymore. So
but that really, I mean, they're still off right now.
Yeah, it's unbelievable. So I decided to go damp January too, which damp, not dry, because I could never do dry. And which doesn't start till Monday, even though it's January. I'm still having good wine. Yeah, I had a nice whiskey last night. Unbelievable. We should get to this stuff.
This has been like 2 weeks of Thursdays. It's like every day. Like every day, there's another party coming up.
I know, it's crazy. I'm going to one tonight. I'm doing another one tomorrow. It's just nuts. Okay, let's get to it. So, we talked about what was going on with that end of the year sell-off, and it was solidly strong, I'd say, right? Which is unusual. If Mark, correct me if I'm wrong, from our years in the industry. I always seem to remember the Santa Claus rally as opposed to the slump. I mean, there might have been a few times, but always seem to rally into the new year for some reason. This year, no. We had some pretty solid sell-offs. Would you agree?
We had some solid sell-offs, and it actually kind of reminds me, although not even as vicious, of 2018, that we had a rough December in 2018.
Okay.
And everyone was sitting around the holiday tables going like, what's happening in the markets? Of course, we've seen what we've done. SPY's doubled since then.
Yeah.
It's always a little, surprising when it comes. You feel like there are good spirits all around and everyone's hitting the red sell button.
Yeah, right. And my original thought was, we're obviously getting a new administration in 20 days, right? Or whatever it is now, 18 days. Trump has come out and been very outspoken about what his policies are. And, whether you like Trump or not, to me, it seems like they are definitely more beneficial to investors and people who have to pay taxes and all that kind of stuff. So it surprised me that if people were taking some harvesting of profits in this year and paying the higher taxes versus rolling them into the Trump administration seems a little out of whack to me, right? And I know, Jason, you're going to talk a little bit about Volin and what it was showing, but you also had an opinion about Trump policies too, which might not be as economically favorable as we think. And I know there's a lot of talk about tariffs and how that can be inflationary and et cetera. So go ahead, have at it.
Well, the first thing I think that that Trump can implement fairly quickly is his immigration policies and deportation of a lot of the illegal immigrants that came in during the Biden administration. Biden had a strong surge in illegal immigration. However, while, nobody likes to get overrun by immigrants, that has created demand in our country. Those people need to eat. They need to sleep somewhere. And by deporting them, you are shrinking that demand. In addition, a lot of those people are employed on farms, construction, kind of low skilled labor, in an economic standpoint, that labor needs to be replaced. And, because the demand is not going to taper off. We've had two massive hurricanes in the past year. And where's that construction going to come from? So my belief is that labor prices are going to increase. Demand is going to decrease from that. And even though we don't want, unfettered immigration, this deportation might have a little bit of a negative effect on the economy. And I think the FOMC report reflected that by their economic projections of inflation. Some people accounted for these kind of policies and showed that inflation might go up in the next year, causing kind of the catalyst for this.
So we might not have seen the bottom of the interest rate reductions, is what would happen there, right?
Well, I think we might have seen the.
We have seen the bottom, I should say.
Yeah,
that's a better way to say it.
We
right?
might, the FOMC is happy with the way inflation is going, or if they're upset, they might raise rates again. The tariffs is another thing that you were mentioning.
Yep.
And especially since the tariffs are more punitive in nature, like, Trump talking about tariffing Mexico because of illegal immigration, but that's not an economic reason. That's it's a punitive diplomatic diplomatic reason. So I think that can have some negative effects on the economy that, unless Mexico does something. Now, America is in a strong place economically, so it'll probably affect the foreign countries more, which I think is what Trump is counting on, to have them do what they need to do. But I think that too will raise prices and cause inflation.
Sure.
And then the last thing too that I think the Elon Musk, Vivek Ramaswamy Doge Council, shrinking government. Well, shrinking government also shrinks the economy. A lot of our increases in GDP over the past year have been because of large fiscal spending.
Right.
And, I saw an interview with Elon Musk, one of the few times that I agree with him. He said that the national debt is a major problem where we're servicing, we're paying 23% of our budget into interest payments.
Sure.
And he wants to help cure that. So that shrinks, though, government. Or increases inflation if you're trying to monetize the debt. So one way or another, I think a lot of these things are necessary steps, but they're not necessarily economically.
But okay, so Mark, I'll let you jump in too if you want. My question would be, that sounds to me that it's almost like ripping Band-Aids off in a way, meaning that these are steps that need to happen and they're going to have short-term negative effects economically, but down the road, as we get those things in line, it could create new opportunities that would ultimately be, growth related, and then all of a sudden good and maybe more efficient, I hope. Right. So maybe a short term.
All I know is Jason's way smarter than me on the macroeconomic front as far as all of this. My, caveman take on this is that all of this is just going to lead to more volatility. And I think I'm just generally expecting a little more chop. I feel like, volatility tends to cluster, and we've had like a pretty long, buoyant, relatively low vol, market. It's coming due at some point in increased volatility, whether that means a big event or whether that just means more general chop across names or whatnot. But I think we're at the lower end of where vol is and, where dispersion is. And I would expect to see more in 2025 for some volatility structural reasons, but also, given what the, political, the geopolitical environment looks like.
Yeah. Right. Do you guys know where SPX short-term vol is? I'm not talking about 0 DTE vol, but let's say like a 20-day. I'm trying to look that up real quick as we're talking.
Oh, we got here with, I think it's like 17.46 is what we have like in our vol calculation.
Okay.
Yeah, I even have actually lower that the 30-day vol in spiders is in SPX is like 14.
14. Yeah, that's still pretty tepid, I'd say. Right. Okay, so
less than 1% a day moves, but we've been having more than 1% a day moves.
Yeah, for sure.
Well, Yeah.
I would expect that 30-day number to keep creeping up if we keep having some days like this. And heck, we already chopped pretty big this morning based on from futures overnight high.
Yeah. So right now Nasdaq's up 1%. S&Ps are up 0.85. Dow's up 0.5%. So yeah, I mean, even the upside still counts, percentage wise. I know volatility tends to subside on upside moves, but these are pretty solid moves, right?
Oh wow! Just in the course of this show, we've rallied 40 points.
Yeah. So interesting. All right. So Jason, I think you want to go to Volin. Let's do that.
Yeah.
You said when we talked about this pre-show, you mentioned that Volin's been, I don't know what the word you use. I'll use my word, predicting this or showing this. Let's talk a little bit about that.
Sure.
And what you kind of analyzed here.
Yeah. So typically, from what we've seen in Volin, but just kind of as a foundation for what we're talking about, 10 billion in aggregate Vanna is about average in SPX, and that creates that very small, low vol stair step up.
Okay.
If are you sharing Volin now?
We are sharing it. Yeah, go ahead.
I'm on Volin, so I'm not.
Yeah, that's okay. We can see it. Go ahead. Just go ahead.
This has been the trend over the past 6 months of aggregate Vanna, and you can see over here is the average point, right here at around 10 billion to 15 billion.
So wait, let me interrupt. Sorry. I just want to make sure people understand this because this is important and it's a little more complicated. So you said average aggregate SPX Vanna is 10 billion?
About that, yes.
Okay, what does that mean exactly? That means not too warm, not too cold, and not much going to happen, or stair step up. I think you mentioned, and tell us why that is.
Okay, so also more as a foundation, Vanna is the movement of delta based on movements in implied volatility. So let's say you have a 30 delta put that's expiring tomorrow.
Okay.
And implied volatility comes down.
Mm-hmm.
That 30 delta put has a less likelihood of finishing in the money. So the delta, well, it would be technically negative 30 delta, would go to negative 25, negative 20 delta.
Okay.
Right. So Vanna is measuring those movements in delta based on movements in implied volatility.
Okay. And this is one of your favorite metrics, I think. You always talk about Vanna as opposed to gamma and charm, right? You're more of a Vanna guy relative to these movements.
Well, for swing purposes, yes.
Okay.
But the thing is that dealers, they don't, as we've spoke about on the show before, they don't hedge Vega as strictly as they do delta and gamma.
Mm-hmm.
And so when implied volatility moves, those deltas will be more apparent. They need to be hedged on the dealer side. And that's why we because of that, Vanna, aggregate Vanna shows kind of where the puck is going as opposed to where it is or has been. And that's why we like Vanna as a metric, aggregate Vanna as a very high level overall metric.
Mm-hmm. Okay. Makes sense.
And our regressions have kind of shown this out too, that it leads. It doesn't, it's kind of amorphous when it actually does lead, which makes it difficult to trade. But, if you give yourself enough time or plan your trades well.
Yep. Let me be the contrarian real quick, and I want you to explain it away. Let's say that I say to you that 10 billion in Vanna to me for SPX seems minuscule relative to the notional of all of SPX, which is in the trillions, I think. So is there a case for it being nominal and has no effect on the market at all?
So
prove me wrong.
Well, I mean, if in our white, I don't know if it's in our white paper actually, but we've done a bit of studies on ES movement and SPX movement. We learned that about 25 billion in notional movement, gamma, Vanna, all combined.
Okay.
Results in about a 1% move in SPX.
Okay, so that's a good point to know.
Mm-hmm.
So 25 billion notional can equate to about a 1% move. Okay, that's interesting.
And this 10 billion in aggregate,
I would definitely just support that idea of like how maybe not that specific number, but my experience is that a relatively small single-digit % of volume has a short-term impact on the to the close impact or to the next close impact on like that marginal flow just tips the weighing machine in it. Yeah.
Okay. So again, I'm trying to keep it. I know not everyone's going to understand this who's watching, so I want to make sure they do at the base level. If this Vana number is important to you, which I'm not saying it isn't or is, when that volatility changes, are you also saying that it causes a delta discrepancy in dealers' books that they have to cover?
So when implied volatility changes, that causes soft deltas, like second order deltas, movements that they have to cover before the end of the day.
So this becomes important then, because when we get to those, the number that's toward Mark's number of 25 billion, obviously it's a much bigger number than 10. And now all of a sudden we might have, maybe a little bit more profound effect on market movement. Safe to say.
Right. And this is also only showing dealer hedging based on Vana. So there's, a whole litany of even dealer movement. New orders are going to create delta movements. Gamma movements are included in there, although that's, a little bit less than Vana, but Vana is a good, you could foresee kind of how markets are going to move from Vana easier than you can these other metrics.
Got it. Okay. All right, good. Sorry, I just want to make sure that was all clear. So, okay, what are we seeing here now? I see where your average is about 10. I get that. Now, what's going on here, and what did Volin show us toward the end of the year that might have been predictive?
So, to first talk about the big rally that we had through 6,000, we saw massive amounts of aggregate Vana in the 30 billion range, right? And we started rallying. This is prior to the Donald Trump victory, right? When implied volatility started getting sticky after the election, right? So prior to the election, implied volatility was staying sticky for projecting that there will be volatility after the election, right? And we got these negative prints right here from that. You can see this is all in August. Right? I'm sorry, not August, October, right? This is all in October. And then as soon as right here, I guess, right, when Trump was declared the winner, the implied volatility just collapsed because he was declared the winner election night. That was not projected in the options space, in positioning, anywhere. That was not projected. Everybody thought that it would take 2 to 3 weeks to determine a winner, right? And when that collapsed, aggregate Vana kind of returned to that 10 billion area, and the market shot up, right? Mainly because of that collapse. This positioning had to change, right? Here in early December or like mid-December, we started seeing aggregate Vana start to collapse again. And the reason why is because we started seeing price go into these sold calls, primarily at 6,100, even 6,050, 6,000 had a lot of calls, and even now 6,250. These were huge Vana strikes that when you cross over them, Vana gets reduced considerably.
So in terms of what the dealers had at those levels, I think you said 6,050 or whatever you said, the dealers were long these out of the money calls, or was it? Okay.
Yes.
So if they're long these out of the money calls in vols decreasing, right? They're losing long deltas. Yeah.
That's exactly right.
They're having to purchase things to replace that. Typically,
well, they're purchasing less. That's what kind of the declining Vana is saying. They have to purchase less to hedge their things, and they're now more delta hedging.
Got it.
Because they're in the money. So every dollar has to be matched, or every delta has to be matched by the dealers now, right?
Okay.
So we get to this point right here, and this is around the
what's that date, Jason? I can't see that.
Right?
Yep, I see it now. Okay.
So FOMC was here, correct?
Yep.
And that's what we had a negative aggregate Vana. We saw that there would be volatility. Because there was a lot of you could say call wall, but a lot of dealer long calls at the money and just above the money. We saw limited upside, but if there was a downside, it would get wild. And that's pretty much where we're at now. So if I shrink this, you can see the height of Vanna here
Yep.
is at just average here at 10 billion, right?
Okay. Yep.
And we're just beginning to get a couple of puts being bought. That's been a big problem. Puts have not been bought. So, between these levels right here, we could be seeing some whipsaw. The maximum area here is at 6,100. So I think that we will touch somewhere in this area at some point, probably January, maybe February.
Okay.
We might get up as high as 6,100, but this is a strong resistance right here, kind of a big wall here at 6,150.
The call wall is what you called it?
I mean, that's a popular term. We don't call it that here, but
I like the call wall. I think
Jason's not wading into call wall.
I want to be on the call wall. You need me on that wall.
Yeah, I mean, and you could even see, even in any kind of hedging, you'll see that we will whipsaw in this area. That this is going to be a bit of support right here.
Yep.
At the 57.75 area.
Yep.
And then the resistance will be up here at 6,100. But because overall levels are low, it'll swing rapidly because dealers are not hedging much. And you also notice too over the past, I guess, week that VIX has not been reacting quite as much as it should be. I guess when we went up 40 points, but I saw before VIX was still up or barely moved.
Got it.
And so, in this area, that's kind of what we're seeing. So
so back to that 6,100. Can you put your cursor there? Because I want to make sure I'm doing the right thing here. I think it's that little top red point there after the green.
The top, hold on, we're updating.
Oh, yeah.
The top red point up here is 61.65.
Oh, okay.
But the slope right here is the problem.
Okay, so what does it take? I guess my question is, what does it take to get through that 6,100 and really cause an upward surge? Because now we're into no man's land. You know what I mean?
Yeah, I think.
So what would create that just we broke through and there's nothing to look back toward? We're gonna run for a while.
Yeah, if we get above 61.65 area right here, 61.90.
Yep.
If we get above that, then we're going to have a blow off top. Okay. Probably over here to 6,500 could be the blow off will be over to here to 6,300. Yep. There's not much stopping up to 6,500.
Okay.
What could cause that? There's any number of catalysts that may cause that. I mean, if there's some kind of fiscal injection or liquidity boost, I think that could cause a strong move overnight. Dealers are just one aspect of the economy. All the fundamental traders, the liquidity traders, they would all buy in that scenario. And if they can buy above 61.95 area, if they could buy above that area, then the dealers will be at their back. So they'll be helping them surge.
Get a little wind behind them, huh?
Yeah.
That would make for a fun first quarter.
Yeah, right? No kidding. Jeez. Okay, good. All right. So next question is, how are you trading this? How are you positioning? So Mark, you can chime in here too, because I don't trade that much anymore. I do, but I'm not using, I'm not smart enough to use this stuff. You guys have to tell me how to use it. How are you trading this? And this is not financial advice. It's not a recommendation. It's just how you two guys are thinking about these things. If you are, you might not be.
Yeah. So I think that one thing you might want to consider is going long vol and long skew. And the reason why
say it isn't so. So,
and the reason, and when I say long vol, what I mean is like kind of like maybe buy like a strangle or a straddle for like 2 months out. Do it on XSP. You don't want to spend a lot of money on something like this.
Yep.
You can possibly put two kind of short gamma-ish, like butterfly calendar kind of things at the bounds of these. So, like one over here at 57.75 and one over here at 6,000. that's if you believe in these bounds very much. I think the upper bound is going to hold pretty hard, but the lower bound, you may want to get a little give here a little bit. Even though you see these kind of goalposts are about the same. So
yeah, that does look good.
You can also kind of look here at this 6,100 area and say that may be a place where we could see a magnet, and that's, eventually probably January, February timeframe. Yeah. Right. I can see a magnet here at 6,100. You could play that. But since we're probably going to see some strong volatility moves and some strong fundamental moves as soon as Trump takes office, I would definitely be long volatility and long skew while we're sitting here in that, VIX being 16, 17 area.
Okay, so it's cheap enough to be long, the word long, which is interesting. And it's probably has potential for volatility as well, which sounds like a good plan.
Yeah.
Mark, you just selling everything?
I kind of operate strategies on a barbell around the time frame that we're talking about here. So like on a super short term, I don't think any of this really matters, like a 0 DT, 1 DT. Where I agree with Jason on the long vol thesis is related to some of the more long-term structures that I tend to use. And some of those long-term structures are probably contributing to those dealer long calls at that level, because I really like selling the upside call to buy the downside put spread as, protection as a hedged equity structure. And one of the adjustments I make to this structure is based on the overall volatility level. So setting, rather than like a fixed 20% put spread, like a very famous trade does, I tend to adjust those legs based on the volatility environment, or that is an adjustment I will sometimes make. Right now, because we're in a relatively lower vol environment, and like we were saying before, for all these reasons, if we think vol's going up, to the extent that I'm reading a 13 vol to make my, adjustments on these, that's going to give me a smaller put spread. Whereas I actually want a bigger put spread than I think this vol environment implies. So my expression of, covering that long vol would be to adjust those legs on something, that rather than go, 318, you push it to 520, or you adjust the legs on those, or maybe you give yourself more upside and pay a little in this month. So it's around the kind of corners of those, structures that I express a long vol bias.
Got it. Okay. Interesting. All right.
Cool. That's a great trade too, because I think, a lot of people, a lot of institutions in particular, do the buy, put, sell, call. I mean, that's how we get these structures now. But with right now, when we're expecting higher vol, adjusting those legs and being flexible, as opposed to, very rigid, like the very famous aforementioned, that we won't, I guess, advertise trade is.
But that goes both ways. It's not just like being long vol in a, from a Vega perspective. Like if you're thinking about this as an investment structure, like long vol to the upside is good. You don't want to cut that off too much. You don't want to sell your call too cheaply there. So like think about the volatility components of that trade. And if you want to express long vol, sell less, close to the money Vega. Let it run past Jason's not call wall.
I like it.
Call wall was coined by somebody else. That's why I didn't want to steal it. But,
but one last thing though on your Vana expression, are you what terms are you using to compute that data? Are you using all the terms? Or are you using the first couple weeks plus a 30-day? Or what goes into the analysis?
This particular one is all expirations.
Okay.
I could show you.
Yeah,
you want to see it all broken out by expiration. Check it out.
Okay, hang on. Go ahead.
If you want to see it broken out by expiration,
look
at what we just launched.
Oh, aren't you cool?
A 3D chart of what of where that Vanna is. But you can see a lot of this Vanna is in for the quarter, right? This is, I think, the JHE. This is the JPM thing that just launched. But and then you can see underneath here, there's the negative Vanna down here.
Wow, look at that fancy pants.
Yeah, right.
This is what you did with your holiday break.
Yeah.
I drank really good wine, and you did this. Wow.
Yeah. But
Perfect.
here it looks like this is a huge call strike here at 64.05 for the next month.
Okay. But the answer to the question then is you used all terms.
For this analysis, yes. When I do my trading analysis, I like to do kind of a stair step. I like to look at the next week Vanna because that will degrade faster. And then the 5 to 45 days to expiration because that will be a little bit faster, but not as fast.
Yeah.
And then, and then I look at the rest because implied volatility on those out months don't move as much.
Right.
But, and because of this, spike right here that we saw that I showed before, this one right here at 64.05, I kind of tend to think that over the next month, maybe, month and a half or so, we will slowly kind of trend to the upside a little bit. Wild, it'll be larger standard deviations, but we will trend to the upside.
Okay. I like it.
Up to like 6,100 area.
I'll hold you to that. I'll remember that. Don't worry.
All right.
All right, boys. That was good.
You want to take the other side of the trade there?
Yeah, no, I like it. Well, when we tagged this topic, you said Volin was showing this, so now all of a sudden I became interested. My thing's not doing. So I became interested in what Volin was seeing. So that's great. That it shows that. That's why the product's great. Don't forget to check out Jason at Volland. What is it? Vol.land?
Vol.land right here.
www.funds.com. And for Mark, harvestedfinancial.com. Make sure you check his deal out too. He's doing some new things.
Yeah, we just also launched a Substack, wizardofops.substack.com. You could get it on we posted a link on Twitter today. It's something we're starting this year because now my morning tweets can now include charts. So
good. Awesome. And by the way, is that a Volland hat that you have on?
Oh yeah.
Wait a minute.
It's a Christmas gift.
Okay, I will be looking for that in the mail soon because I don't have that one. I have the old white.
You got the white one.
I know. I want that one. I like that one. Send that baby to me, but all right.
All right, I'll get Jill to send you one. But you got to wear it.
I'll wear it. I'll wear it here.
You can't lose it on the tennis court, I
have it in my.
I have it last time.
I have it in my paddle bag. I found it. It's in my paddle bag for sunny days. So, Mark, what's happening? You ready to roll? We're out of here.
I'm ready to roll. I checked back on the market. We are completely flat since this show began. But we've had a nearly 100-point round trip.
Oh my God, you're right. I used to hate that when I was hoping that the market would go up way back when. And then I'd look at it after a while and I'd be like, oh, I don't want to look. And it's down or unchanged. I'm like, oh, damn it. I always got all sad about that. I'm
just happy because I closed out my put leg while we were up, and now I'm hoping to close out my call leg when we're down.
Oh, look at you.
Look at him day trading on the show.
You hear the
I don't need to. I've got my bots
in the background.
Oh, he's got his bots. Oh, I see.
There you go. Perfect. Oh, man. All right, boys. Well, you guys have a good rest of the week. And, we're into the new year, sort of. I think Monday starts the new year in my head.
Are we having a show next week with the Carter? That's the Carter Day.
Oh, good point. Oh, well,
January
the
market 9th. I think it's Thursday, right?
Yeah, Thursday's the 9th. The market is actually closed on the 9th for Carter's funeral. So no, we will not have a show. We will unfortunately be running a rerun on that day.
Okay.
All right.
All right.
All right, boys. Have a good weekend. Good rest of the week. Good to see you. And
happy trading.
And happy trading. Thank you.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.